The IMF and World Bank meetings are being held fully in person for the first time since the COVID-19 pandemic closed down much of the world. The meetings come as the global economy faces a complex mix of challenges. COVID-19 continues to present challenges to supply chains and impact the overall economic picture. The climate crisis is impacting all continents, and the ongoing conflict in Ukraine is driving up energy costs and contributing to soaring global inflation.
We cannot afford inflation to be a runaway train. And so we are risking, if we don't have strong action for this to happen. But it is a very, very difficult road to navigate.
Central banks around the world have been steadily raising rates to levels not seen in decades. The U.S. Federal Reserve has raised rates 3.25%. That will likely increase to 4.4% by the end of the year. In the UK, the Bank of England raised rates from 1.75% to 2.25% in September, and the European Central Bank is expected to raise rates again later this month by another 75 basis points. Still, the IMF warns it may not be enough to head off recession.
The risk of recession has gone up. We have calculated that about 1/3 equivalent of the world economy would have at least 2 consecutive quarters of negative growth this year, next year, and that the total amount that would be wiped out by the slowdown of the world economy is going to be, between now and 2026, $4 trillion. This is the size of Germany GDP.
On Tuesday, the IMF will release its annual World Economic Outlook. The managing director said last week that she expects to see the current growth projections of 2.9% for 2023 to be lowered. Jim Spellman, CGTN, Washington.